Hello friends, today's topic is profits in lieu of salary, which is part of the chapter Salaries. Profits in lieu of salary is covered under subsection 3 of section 17. We will be covering under it what the subsection says, what is the taxable portion, and what amount, what component is not taxable. So today's topic is profits in lieu of salary. Profits in lieu of salary meaning payment made by the employer to the employee instead of salary. In addition to the salary, any payment made by the employer to the employee which is not covered under the definition of section 17 subsection 1 may be covered under subsection 3. There are several clauses mentioned under the subsection 3 of section 17 wherein if any payment made by the employer will get covered under subsection 3 if the nature of the payment is as such. So the first point on the screen you can see payment in connection with termination of employment. So any payment in connection with termination of employment by the employer or former employer will get covered under subsection 3 of section 17 and accordingly taxed as salary. Any payment in connection with modification of the existing terms of employment. So payment in connection with modification of terms and conditions of the employment. It could be either the current employer or the former employer. This payment is generally a capital receipt. Any payment received by the employee on account of modification of the terms of agreement of the terms of employment can be termed as capital. It is termed as capital in nature. However, it is specifically taxable under subsection 3 of section 17. Accordingly, though being capital in nature, it will be subject to tax in the hands of the employee. Third category being payment from the provident fund, payment from provident fund or any other fund. If there is any payment from the unrecognized provident fund to the employee, then the same will be subject to tax under subsection 3 of section 17, mainly the employer contribution and interest thereon from the unrecognized provident fund is subject to tax as profits in lieu of salary. So on the screen, any payment due to or received by an SSC from his employer or former employer from a provident fund or other fund other than gratuity, pension, compensation received by a workman under Industrial Dispute Act. Any payment from this fund won't be covered under profits in lieu of salary. From a statutory provident fund or public provident fund, from a recognized provident fund, from approved superannuation fund, any house rent allowance. Any payment from this fund won't be covered under profit in lieu of salary. So all the types of provident fund are getting covered over here except for unrecognized provident fund. And reading the last para, to the extent to which it does not consist of the employee's contribution or interest on such contribution. So out of the four provident fund, unrecognized provident fund is not mentioned in the exception. And out of the four components meaning employer contribution and interest thereon, employee contribution and interest thereon. So employee contribution and interest thereon will not form part of profits in lieu of salary. Any payment to the employee from the provident fund, which is employer's contribution and interest thereon, will be taxable as profits in lieu of salary. So any payment, any withdrawal from the accumulated funds of an unrecognized provident fund, employer's contribution and interest thereon will be subject to tax as profits in lieu of salary. The screen where any sum paid to an employee at the time of maturity of an unrecognized provident fund, employer's contribution to the fund and interest thereon is taxable as salary, which is as profits in lieu of salary, and will employees contribution and interest thereon is not chargeable to tax, since the same have already been taxed and under the head salaries and other sources respectively. So employees contribution, as we have discussed earlier, will be subject to tax. And the next two pointers are any payment received under keyman insurance policy. Keyman insurance policy is the insurance policy undertaken by the employer to safeguard against the termination, to safeguard against the retirement, or safeguard against the death of the key employees. So keyman insurance policy received by SSC including bonus, where the amount is received by the SSC under a keyman insurance policy including the bonus, the same will be subject to tax under the head profits in lieu of salary, where the amount is received by the employee. And any lump sum payment or otherwise, before joining the employment or cessation of employment, before joining the employment or cessation of the employment, any payment received by the employee out of the employer-employee relationship, the same will be subject to tax under the head profits in lieu of salary under subsection 3 of section 17 of the Income Tax Act. Now reading the bare act of the section. Subsection 3, profits in lieu of salary includes the amount of any compensation due to or received by an SSC, the amount of any compensation due to or received by an SSC from his employer or former employer at or in connection with the termination of his employment or the modification of the terms and conditions relating thereto, will be subject to tax under section 17 subsection 3 clause 1. Any payment other than any payment referred to in clause 10, which is gratuity, clause 10a, which is pension, clause 10b, which is industrial dispute, clause 11, which is statutory provident fund, public provident fund, clause 12, recognized provident fund, superannuation fund, and HRA, due to or received by an SSC from an employer or a former employer, or from a provident or other fund, to the extent to which it does not consist of contributions by the SSC or interest on such contribution, or any sum received under a keyman insurance policy, including the sum allocated by of bonus on such policy. Explanation: for the purposes of this subclause, the expression keyman insurance policy shall have the meaning assigned to it in clause 10(10)(d) of section 10. So clause 10(d), the keyman insurance policy has been defined over there, and the keyman insurance policy, as we have discussed earlier, is an insurance policy on the key personnel of the employer. Third clause is any amount due to or received, whether in lump sum or otherwise, by an SSC from any person before his joining any employment or after cessation of his employment with that person. So with that, we come to the conclusion of profits in lieu of salary. In this, we have covered the subsection 3 of section 17, the clauses mentioned therein, where the payment may look like that it is capital in nature, but it is taxable as revenue and it is subject to tax in the hands of the employee, wherein amount received at the time of termination of the employment is subject to tax, amount received at the time of modification of the terms of employment is subject to tax. Any payment from the unrecognized provident fund which is employer contribution and interest thereon is subject to tax. Any amount received by the employee under the keyman insurance policy is subject to tax, and any amount received at the time of joining of the employment or at the time of cessation of the employment is subject to tax. Here the payment received from the former employer also is subject to tax. The basic criteria being there should be employer and employee relationship exist for the taxability of the payment under the head salary and taxability of the payment under the head as profits in lieu of salary, which is defined under subsection 3 of section 17 of the Income Tax Act. Thank you.